Hello students, you are the future chartered accountants of India. I am CA Abhijith Acharya, welcome you all for today's Abhi CA classes. Today we are going to complete this last part of this PGBP, that is part 5, and I hope you have gone through till part 4 of this PGBP chapter. This forms a very important chapter for your examination purpose, so keep on trying, keep on revising so many times as you can. So without wasting further time, we'll discuss the remaining portion of this chapter, that is section 40, amount specifically now deductible. It says section 40 subsection A subclause I. It says that payment made to NR. NR means non-resident. Any amount paid or credited to NR or foreign company, and if TDS has not been deducted in previous year. What do you mean by TDS? And we'll discuss in detail in the actually deduction chapter, deduction, the tax deduction at source and tax collected at source chapter. And so as far as now, please remember the keyword. The TDS has not been deducted in the previous year. For some of the payment, you need to deduct the TDS portions. TDS means tax has to be deducted on that portion, then that amount should be released. For example, for your understanding purpose, I will simply mention one example. For example, you are having FD interest. Let's say you are receiving 1 lakh amount as a FD interest in a bank, and the bank is a payer. You are a payee, correct? Bank has to provide that interest amount after deducting 10% of the amount. That is 1 lakh into 10% means 10,000 has to be deducted from your interest account. Then remaining 90,000 should be released to you as a FD interest. Even though the gross FD interest is considered to be 1 lakh, but your cash inflow in terms of your FD interest is only 90,000. But 10,000 has already paid to the government of India by the bank on behalf of you in the form of TDS. This is a concept. If the TDS has not been deducted in previous year, if bank has not deducted the TDS in respect of the FD made by NR, then and or the TDS deducted, the 10,000 amount has been deducted, but that has not been paid to the government by the bank up to the due date of filing income tax return. Due date of filing income tax return means the 31st July or 31st October, as the case may be. Okay, the TDS has been deducted, but it has not been paid to the government up to the date of filing income tax return. Okay, these two conditions are met. Then the 100% of such a payment shall be disallowed. That means that interest is an expense in the books of banks. For example, in our example, so that expense shall be disallowed. That is, will be added back to that extent. That is to the extent of 1 lakh. Okay, 100% of such amount, 100 into 1 lakh, 100% of that amount, that 1 lakh amount has to be added back to your profit and loss account. Okay, this is the brief explanation. Next, section 40A it means the payment made to resident. The above section tells about the non-resident. Here we are talking about resident. Amount paid or credited to resident, and if TDS has not been deducted, and TDS deducted but not paid to the government of India on or before the due date of filing income tax return, then 30% of such demonstration shall be disallowed. In our example, 1 lakh in 30% is 30,000 is to be disallowed from your profit and loss account of the bank in our example. Okay, in terms of that interest portion, because interest is an expense for that bank account, bank SSE, which is an income for us. So we have to disallow 30% of that. We have to add back that amount to the profit and loss account. Okay, that's some important notes. If TDS is deducted in subsequent year, for example 23-24 ka liability has been deducted in 24-25, that means before on or before 31st filing of income tax return, right? Or deducted in previous year but not paid to the government after the due date. If it has been paid after the due date, not been paid after the due date of filing up, then such 30 or 100% shall be allowed as a deduction in which the payment has been made or TDS has been complied or TDS has been paid to the government. Even though the due date, within the due date also, if it is not been paid to the government, when it will be paid. For example, on 31st December, if it has been paid related to 23-24, the TDS amount will be paid is paid in 31st December 2024. Then that I will clarify once. The TDS liability of 23-24 is paid on the in the month of December 2024. That means in this case after the due date, then the deductions will be allowed in the year of the payment. That is in the year of 24-25. Okay, it should be disallowed in 23-24. It will be allowed in 24-25. So it is considered temporary difference. I think you have heard in your accounting standards, one of the accounting standards, there will be concept of the temporary difference, that is the DTA concept or DTL concept. So in that case, there will be concept temporary difference. It is temporary in nature. If it is disallowed in the earlier year, it should be allowed in the year in which it has been complied. Okay. Then the exception to 40A IA, 40A IAI. DTA means deferred tax asset. Okay. If any amount is paid or credited to payee without TDS, that means bank is not complied with the concept of TDS, but such payee, plus pay means we as an individual, as a payee, have furnishes its return of income. We are going to furnish my income tax return, our income tax return, taking into account such amount in our revenue, even though it has not been deducted, but that 1 lakh amount has been shown by me in my income tax return as a interest, as a FD interest, and I am paying tax on the same. Then the payer, but the payer, that is bank, needs to furnish a certificate from SEI to this effect, that he has to confirm that the payee, that is me, is filing his income tax return by disclosing that FD interest in my books in my income tax return, and also paying the tax on the same. For these reasons, I am not deducting the TDS. I am means the bank is not deducting the TDS, for which the CA's attestation should be needed. Okay, then it shall be deemed that the payer has deducted the TDS, the bank has deducted the TDS and paid to the government on the date of furnishing the income tax return by the payee, and deduction of such expenses shall be allowed for the bank in their books of accounts accordingly. Even though the payer has not complied the TDS, the payee is a very intelligent person. He is taking that interest income in his return of income, while filing his income tax return, and also paying the tax on the same. Then it is deemed that for which the bank needs to bank needs to furnish a certificate from the chartered accountant, and then it will be deemed as the bank has complied. Not only bank, the payer has complied the TDS concept, and also the expenses will be allowed for bank accordingly, and also within the due date of filing an income tax return. This is the concept, very important. However, the payer, that is bank, has to pay an interest under section 201 subsection 1A at the rate of 1% for the delayed amount, for delaying the amount, 1% per annum per month, or part of the month on the amount of TDS not deducted from the date on which the TDS was supposed to be deducted, and till the date on which the payee furnished income tax return. The difference amount, this will be seen as delay in the TDS payment, for which the payer is liable with the interest on section 201 subsection 1A at the rate of 1% per month or part of the month. Okay, this is very important. Next, section 40A 2B. Okay, subclause 2B. Royalty fees are charged by state government. If any royalty fees is exclusively collected by the state government from state government undertaking SGU, then it shall be disallowed for such SGU. Simple, not very important. Section 40A subclause 3. TDS on salary payable outside India, or if any salary is paid outside India or to any non-resident in India, if the TDS is not deducted, and TDS deducted but not paid to the government up to the date of filing of income tax return, then the such amount shall be disallowed as deductions for the pay year. Okay, it will be salary will be an expenses in the books of pay year. It will be disallowed. If the TDS has not been complied and TDS complied but not paid to the government, for such consequences, it will be disallowed. Okay. Next section 40A subclause 5. It says the tax on non-monetary purchases. That would be the non-monetary purchases. Let's say, for example, hostel facility or children education facility or the room facility that we have already covered in our salary chapter. If employer offers some non-monetary perquisites to employee, perks means perquisites, then tax on such non-monetary perquisites is a responsibility of employee, because the employee has to bear such the liability. It will be from a part of his income, right? So for that reason, it will be taxed accordingly to employees. But if tax on such perquisites is already paid, already complied by the employer himself, then the tax is not allowed as a deductions for employer, because it is exempt in the hands of employee under section 1010cc. If the tax on that non-monetary purchases only we are talking about is paid by the employer, then that will be exempt in the hands of employee, and accordingly the deductions would not be allowed for employer for the tax payment. Okay, super. Then section 40A2, it says the payment made to specified relatives. AO means assessing officers can disallow excessive or unreasonable amount if any amount is paid to the relatives. If SSC find in your question, they would provide, for example, the amount paid to relative is 10,000, which is not reasonable to the extent of 2,000, then 2,000 will be disallowed. Simple. Paid to the relatives. Relative means in case of AOP or board of individual, the members and relatives is their relatives are specified business, specified persons, that is relatives. In case of company, the directors and their relative are considered to be relatives, the specified persons. In case of firms or LLP, the partners and their relatives are considered to be the relatives or specified persons. The HUF means in case of HUF, members and their relatives are considered to be specified persons. In case of individual, the spouse, mother, father, brother, sister. Lineal ascendant means grandfather, grandmother. Lineal descendant means the granddaughter, grandson, or subsequent. Greater grandson, greater granddaughter, or greater grandfather, greater grandmother, if they are alive. They are treated to be specified persons. In case of substantial interest, if you are holding a substantial interest, if any person, that means in case SSC or any persons, or in case of their relatives are holding the substantial interest, means in case of company, it's stated to be if any person is holding 20% or more of the shareholding, then they are considered to be having the substantial interest over the company. In case of firm AOP BOA, if they are holding 20% or more on profit sharing ratio, PCR means profit sharing ratio, then they would be considered as the specified business. They will be considered as being held the substantial interest over the firm, the AOP or BOA. Then holding company. In case of holding company, the subsidiary company, suppose let's say for example, holding company has two subsidiary company, A and B. Both A and B are considered considered as the specified persons or relatives. Okay. Then section 40A3, cash payment is very important. The cash payment in excess of 10,000 to a single person in a single day. It is talking about more than 10,000. Up to 10,000, okay. More than 10,000 to a single person in a single day. If an SSE makes a payment for an expenditure to any person otherwise than by account pay check, account pay draft, or through any electronic clearing system as other mode, for example Bharat Pay, Phone Pay, any other, GPay, or as may be prescribed, which is more than 10,000 in a single day, then such expense shall be disallowed. Why it is being implemented? In order to promote the cashless transactions in our country. Okay, 10, if you are making a 10,000 payment or more than 10,000 to a single person to in a single day, then that would be disallowed. Okay, then notes. If payment made to a transporter, if a payee is a transporter, then the limit would be enhanced to 35,000. That means if I am paying cash payment in excess of 35,000, then that this allowance would be applicable, not 10,000. 35,000 should be seen. Okay, if for example freight charges, freight hiring charges, like that. If expenses is allowed in earlier year, that is 22-23, as an on accrual basis, if such expenses is made subsequently in cash or bearer check, the deductions allowed earlier, that means in 22-23, shall be withdrawn in 23-24 and will be added back in the PGBP on for 23-24. Okay, simple. If it is been allowed as an accrual basis, the cash payment is made in the 23-24 in excess of 10,000 in cash or bearer check, then the disallowance would be applicable in 23-24. Okay, then this section shall not apply to any payment made by a commodity agent to receive goods for sale on commission basis, not for personal purpose. He is receiving the cash for in case of in a business of like sale on commission basis. However, if commission agent purchases goods on his own account by paying cash amount in excess of 10,000, then provision of this section would be applicable. Okay. Then exception to section 40A3, there are some exceptions which is being described under Rule 6DD of Income Tax Rules 1962. It says for following categories of transactions, the above provision will be applicable, will not be applicable. That means the more than 10, more than, even though you are paying a cash, that is okay. Some exception allegation. The payment made to RBI, bank, LIC or government. Let's say for example, if you are depositing the cash payment, let's say for example 1 lakh to the bank, then no, it is treated as payment only, but that disallowance would not be applicable here. Okay, then payment made through NEFT, RTGS, debit card, ECS, credit card, UPI, BEAM, already explained. Payment by book entry, that is some adjustment would be there, then it would be not, for example discount availed, discount paid, and hence no balance would be available in the books of accounts. Then the payment of procedure of agricultural product, forest product, poultry product, fish product, livestock. For example, if you are paying the credit, if you are paying towards the credit purchase of fish, if you are handling in fish business, if you are paying the cash payment to the vendor for, let's say for example more than 10,000, that is also okay. It is a fish product. Okay, then payment of retirement benefits, gratuity or any other, there such payment is up to 50,000. Here the limit would be seen as not as 10,000 or 35,000. We have to see the limit as 50,000. Up to 50,000, the cash can be provided. Okay, next, payment of salary to an employee who is posted to any other place or ship for 15 days or more than his normal place of duty. Without other than his normal place of duty, if he has been posted to any other post for 15 days, up to 15 days, more than 15 days or more, if the cash payment is made to him, that's also okay. Then payment made where banking facilities are unavailable. If the payment made where banking facilities are unavailable, okay, it is understandable. This payment made by any person to his agent who is further required to make the payment in cash for goods on behalf of such person. Not so important. Payment is made by an authorized dealer or a money changer against the purchase of the foreign currency or travel as check in the normal course of business. Let's say for example Elon Musk came to India by his dollar. He is going to convert that dollar into Indian rupees in a money exchange or any other exchanges bankers available. Then the bank is providing that exchange amount in INR rupees to Elon Musk. Then that disallowance for bank would not be applicable here, because it is necessary for Elon Musk to receive that INR in terms of in exchange of his dollar, right? Then the payment for purchase of product manufactured or processed without the add of power in a cottage industry to the producer of such product. If any product is produced without the aid of, without the help of the power, electricity power, then for payment of such a to the vendors in the cottage industry, for example, that's also exempt from this allowance. Okay. Then section 40A7, it says the provision of gratuity not allowed. Only payment made to approved gratuity fund or provident for gratuity actually became payment during the previous year, that is 23-24, on the due basis is allowed as a deduction. If it any provision is debited in the profit and loss account, we have to disallow that. Then section 43B is very important. We have already considered this to the extent of 43B. If you have seen our part 4, there are some, for example, if you are making the interest amount, interest on loan, interest amount to the bank or financial instrument, then that would be allowed to the extent of section 43B. We have seen this, correct? And then this we are completely going to cover this in this chapter, in this portion. Following expenses are allowed only if these are paid up to the due date of filing income tax return as per section 139 subsection 1, which are considered as any taxes duty that we have already considered. 43. If it is not been paid in 23-24 financial year, if it is paid within the due date of filing income tax return, then it is allowed in the books of accounts. The employer's contribution towards SPF, that is statutory provident fund, recognized provident fund, approved gratuity fund, approved superannuation fund, new pension scheme, any fund as per law. Bonus commission to employees, if it is not been paid, if it is paid within the due date of the filing of income tax return, then it is also okay. Interest on loan to PFA, that is public provident, public financial institutions, state financial corporation, state industrial investment corporation, scheduled banks, including cooperative society, cooperative bank, excluding, but very very important, excluding primary agricultural credit society, rural development banks. That's also need to be paid on or before the due date of income tax return. That's allowed. Leave encashment to employees, any amount payable to Indian Railways for use of railway tickets. Then interest on loan on borrowings from NBFC. If the payment made after the due date of filing income tax return, then such expenses shall be allowed in the year of payment. Let's say, for example, 23-24 financial any of the expenses is not paid within the due date of filing of income tax return under section 139(1), then if it is paid after the due date, then that expenses will be allowed in the year of 24-25. That means in the year in which it has been actually paid. It will be disallowed in 23-24. It will be allowed in 24-25. Okay, I hope you are understanding. The section 43A, asset acquired from abroad. If any asset is being purchased from foreign country through a loan in foreign currency or foreign supplier's credit, then any profit and loss arising at the time of payment shall be adjusted to the block of asset. Let's say, for example, I have purchased a plant and machinery by taking a loan from foreign banks, that I had to pay the credit or amount or installment amount in foreign currency. If any fluctuation is being occurred in terms of foreign exchange rate, then that excess, that loss or gain arising from the fluctuation should not be debited to your profit and loss account, debited or credited to your profit and loss account, or it should be reduced or added, as the case may be, in the books of accounts in respect of against the cost of asset. If there is a gain, then that is to be reduced from the cost of asset. If there is a loss from the foreign fluctuation, that means loss means you have to pay more, gain means you have to pay less, and then it will be reduced from your cost of asset. Loss, if you have to add it to your cost of asset. The same rule applicable in case of the hedging contract also will not be so important for your examination. That is important. The section 41, the deemed PGBP. Section 41(1), recovery against the any deductions already claimed. If SSC was allowed any deductions in an earlier previous year by way of expenditure, loss, trading liability, now SSC has obtained a refund in terms of that such liability during the current year, or there is a remission or cessation of liability. That means some creditor may say that this portion of that balance, this credit balance need not to pay, then that will be beneficial for an SSE, right? This is treated as cessation of such liability. Then such a refund or remission or cessation shall be taxable under PGBP. If it is any allowed in a previous year, if it is remitted, if it is been what you call, if it is the refunded or not seized, then that will be treated as a PGP taxable income. Okay. Section 41, section 3, sale of scientific research. This section we have already seen in section 35. But sale, if you are selling an asset without using in your profit, business or profession, then the taxable amount would be the lower of the sale price or deductions claimed under section 35 as a PGBP income. If the selling price is more than cost, let's say for example selling price is 120, the cost is 100. In this 20 still be treated as capital gain, not treated as PGBP. Okay. Super. Then the sale, if the sale of asset is after the utilization in your business or profession, then we have to add back to the block of asset. The actual cost should be nil, but at the time of sale, we have to see whether any block would be still there, or any block, full block or part. We have discussed it in our part 2 or part 3, if I am not wrong. This concept, full block means part block means the capital gain would arise, even though the asset would be there, or capital gain in which case the value would be nil. Okay. In case of full block means entire block is sold out. Part block means some of the assets are remaining in a blocks, but its value is in negative. In that case, capital gain or capital loss would arise. This is the concept we have to see if the sale is being made after the business use or professional use. Okay. Then section 44AA. This is very important. This is very practical in nature. If you are doing an articleship, then it might be possible to go through practically this concept. Section 44AA, compulsory maintenance of books of accounts. Part A, we will see the first, the specified and notified profession. If gross receipt, if I am a doctor, a chartered accountant, in practice, if my gross receipt is more than 1,50,000 in all the 3 preceding previous year, that means excluding 23-24, we have to see 22-23, 21-22, 20-21. In all these 3 years, if my income gross receipt is more than 1,50,000, then I have to maintain some books of accounts as specified by Rule 6F. Otherwise, I have to maintain such books of account as notified by assessing officer. Okay, in all the 3 preceding previous year, more than 1,50,000. Okay, specified profession means a male FITCO. I have pneumonin. I have mentioned medical, accountancy, architectural, legal, engineering, the film artist. We are coming under accountancy. Okay, that VA means chartered accountants, or interior decorators, or technical consultancy, or company secretary. That is also there, and then other professional as notified by CPDT. In short, male FITCO. Then 6FO. As per Rule 6F, the following books of accounts need to be maintained by the respective profession. That is cash book, journal ledger, carbon copies of bill exceeding the 25 rupees, or original bills of full expenses in exceeding of 50 rupees, etc. Then part B says other SSE. In case if you are not a professional, if you are just handling the business, in that case, if the PGBP income, that business income is more than 1,20,000, or the gross or total sales, total turnover is more than 10 lakh in any, that word is very important, any, in above case, it is telling that all the 3 years, in here, any of the 3 preceding previous year to the likely to exceed or new setup, business are not important, then SSE is required to maintain any books of accounts as notified by assessing officer. However, in case of individual or HUO, the limit will be 2,50,000 for total income from business or professionals, or 25 lakh for turnover or gross receipts. If I am an SSC of individual HUF, I have to say instead of 1,20,000, I have to say 2,50,000. Instead of 10 lakh, I have to say 25 lakh. Okay. Then some note. As per section 271A, if the SSC fails to maintain books of accounts as notified by assessing officer or section 44AA, then penalty would be leviable at the amount of 25,000 metric or more. Then section 44AB is very practical, very important the aspects of this entire chapter. The following person are required to furnish the audit report by specified date in a prescribed form, that is 3CA, 3CB, 3CD. Okay, following persons are required to furnish the audit report, get audited by chartered accountant in practice. Specified professional means the gross receipts. The professional means in the all male FIDCO. I am that gross is having a gross receipt of more than 50 lakh, then he has to get his book of account audited. Then business. If I am having a business, my turnover is more than 1 crore also, I need to maintain my books of accounts and also get my books of accounts audited. But there is one amendment with effect from assessing year assessment year 21-22. It says the turnover limit shall be 10 crore instead of 1 crore if the following two categories are full conditions are satisfied. We have to see in case of business, instead of 1 crore, usually 1 crore. If it is in following cases, if the two following cases conditions are satisfied, then we have to say 10 crore the limit. 1 crore limit will be enhanced to 10 crore. Which and are the conditions? The first one, the cash receipt should be less than or equal to 5% of the total receipt. Okay, the cash payment is up to 5% of the total cash total payments in 23-24. I am highlighting the word and. Why it is important? If any organization is having 95% non-cash transactions, then for them the limit will be enhanced to 10 crore. If in an organization's entire is made through cash receipt, then and the limit would be 1 crore. In other words, in case of special cases, the SSC claiming lower income as specified under section 44AD. What you may 44A will discuss in detail in upcoming last chapter, or 44ADA, and his net total income is more than basic exemption limit. The SSC claiming that lower than in that case also that SSC needs to maintain books of accounts. In the other case, the SSC claiming lower than the income specified under section 44AE. This is called presumptive taxation. In three cases, first one, specified professional more than 50 lakh. Second, business cases more than 1 crore, usually more than 10 crore. In case of on only with regard to cashless transaction made by the organizations. In case of special case, lower income than specified under 44AD, 44ADA, 44AE. Okay, super. Next, non-applicability of section 44AB. This section is not applicable in case the person is declaring income under section 44AD and his total income is up to 2 crore. Okay. Then specified date. Specified date I have mentioned here above. Furnishes audit report by the specified date. Specified date means 1 month before the due date of filing of income tax return. For 44AB clients, the income tax returns due date of filing income tax return due date is 31st October. Exact 1 month before means 30th September. On or before 30th September, you need to get books of accounts audited by a chartered accountant in practice. Okay, this is the exact meaning of specified date. Next, penalty. If I am not or get my books of accounts audited, then what would be the consequences? The penalty would be liable under section 271B. If the SSA fails to get a books of account audited, then lower of the below would be chargeable as a penalty. Number 1, 1,50,000 or 0.5. Number 2, 0.5% of the total receipt or gross receipt. Turnover or gross receipt, as the case may be, whichever is lower, will be charged as a penalty. Very strict provision. Okay, section 44AD. I already discussed if you are claiming your considering your income under section 44AD, then the 44AB section would not be applicable. Okay, then but if you are claiming any lesser income as specified under 44AD, then the audit needs to be applicable. In and around the 44AD tells about this is the benefit given to an SSE who are having the turnover up to 2 crore. Okay, in that case, this 44AD section would be applicable. We'll see in detail now. Reason to succession if PGBP again business only we are 44AD only talking about business, not professionals. For professionals, another 44ADA is there. Okay, the resident individual HUF, resident individual HUF or resident, all the SSE should be resident. It is applicable only not for a company or any other LLP. This is applicable for individual or HUF, resident firm, that is partnership firm, excluding LLP. Okay, who is not claiming deduction under section 10AA, that is SEZ concept, then 80IA to 80RRB, then this section would be applicable. Then following business are not eligible for 44AD. Number 1, business covered under 44AE, that is some other concept. Then second, the agency business. Third, the commission and brokerage business. If you are engaging in the business of these 3 categories, then you are not eligible to claim the benefit under section 44AD. And your turnover should be less than 2 crore. That's very important. If your turnover is more than 2 crore, then you need to check whether I am falling under this 44AB. If I am having non-cash, if I am having cashless transaction, then the 10 crore up to 10 crore is the limit. Okay, no need to get your books of accounts audited. If you are having only cash transactions, if your total turnover is more than 2 crore, then that 44AB rule applicable under section 2nd category. Okay, then the presumptive PGBP. What do you mean presumptive? You need to simply arrive at the PGBP income by simply calculating the one formula, that is the turnover into 8% is your business profit. No need to check any of the disallowance, no need to check any of the depreciation amount, no need to check any of the add back amount. You have to just arrive at your business income at the PGBP into 8%. Simple. Then if the turnover is realized only through the banking sector, only through account paycheck or account clearings, that means if you are having a sales, let's say for example 1 crore 50 lakh, all are being realized then all are being realized through account paycheck or DD from the debtor, then the formula would be changed to the turnover into 6%. 2% benefit will be available. Let's say for example 1 crore 50, let's say for example 2 crore into 8% will come around, if I am not wrong, 16 lakh, right? But however, if you are transacting in any banking sector, the banking mode, then the PGP income would be 2 crore into 6%, that is 6 2s are 12, that is 12 lakh, correct? In upper case, 2 crore into 8% means the 16 lakh, and below 2 crore into 12, the 6% means 12 lakh. There is a benefit of 4 lakh. Okay, so this is the benefit available for SSE. If SSE declares income as per section 44AD or higher income, whose income is up to 2 crore, then SSE is not required to maintain any books of accounts. But if he declares lower than this amount, lower than 8% or 6%, then he needs to get his books of accounts audited, but provided his total income, net total income, should be more than basic exemption limit. If it is less than basic exemption, then no need to file income tax return at all, right? Then if SSE declares income, this is very important clause, okay? Then if SSE declares income for any previous year as per section 44AD, he does not, however, in the upcoming year, does not declare income as per section 44AD in any of the next 5 consecutive previous year, then he shall not be eligible to claim again the benefit of section 44AB for the next 5 consequent years. For example, I have taken an example. In 23-24, you are claiming benefit under 44AB, 44AD. In 24-25, you are coming off, you are opting out of 44AD. That means you are declaring your income as per 44AB. Okay, normal provision. However, if you are not continuing this procedure, then from 25-26 onwards to 29-23, 5 years, 25-26, 26-27, 27, 28, 28, 29, 29, 30. For 5 years, you are not allowed to come again back to 44 AD section. Uh, you need to get your books of accounts audited as a case may be, or you are not allowing to claim the benefit under 44 AD because of this actual opt out fault. Okay. Then section 44 ADA. So you need to consider cleverly, wisely, that whether I need to opt out from the 44 AD section or need to continue for next 5 years or not. As a case may be, by depending upon your tax computation, by if you are not able to compare the tax benefit, then you can approach some of the professional chartered accountants, etc. Then section 44 ADA. PGP on presumptive. Now we are talking about professional. That is, for example, chartered accountant in practice, the lawyer, or any other specified professions are there. No, them. The resident, the person should be resident or resident firm, excluding LLP, engaged in the business of professionals. As per section 44 AA, it's applicable only if my gross receipt is up to 50 lakh. In business case, it is 2 crore. Here it is 50 lakh. And PGP income is simply computed as 50% of the gross receipt. For example, if my income is 40 lakh, 50% of that, let's say 20 lakh, I need to declare. If I am declaring lesser than 20 lakh, then I need to get my books of accounts audited, provided if net total income is more than 2 lakh, 0.5 lakh. In our example, 20 lakh, it's obviously more than 2 lakh 50,000. So I need to get my books of accounts audited. No requirement of any books of account audited if I declare the same percentage. Okay. Then similar points for 44 AD and 44 ADA. Deductions under section 30, 38, that is depreciation, some other deductions shall not be allowed, because simply we have to compute the PGBP income directly by simply following the formula. That's the W is to be computed for the safer side, considering the notional depreciation. Let's say, for example, in 24, 25, I am opting out of 44 AD, then this is necessary because I need to claim the depreciation also. For that reasons, I need to compute the notional depreciation every year for my future purpose. The partner's remuneration and interest are not allowed from deemed PGBP. This is also not allowed. The 100% advantage needs to be paid by 15th of the March 2024 in our previous year 2024. There is no installment dates. You need to pay the income tax, advance tax by 15th March 2024. Section 44 AE, we have talked about in brief. 44 AE is now if I am disclosing lesser than 44 AE, then from that case also I need to get my books of accounts audited. Then what do you mean 44 AE? The presumptive taxation for transporters. If I am having a transportation facilities, then I can able to declare the income under section 44 AE also. The SSE engaged in the business of flying, hiring, leasing such goods carriages, then PGP will be if I am having a heavy goods vehicle. What is a heavy goods vehicle? We'll see in detail in the next points. The 1000 per ton into number of tons into part month. This is the formula. I need to declare 1000 per ton into number of tons into part of the month of having that goods vehicle in your name. For other vehicle, if I am having other vehicles, 7500 into number of months of owning. Okay, this is the explanation. The SSC can declare higher income than this also. This is a very interesting concept, but nobody will declare more than this. Okay, in practical life. There are some notes. It is this section 44 AE is applicable only if the SSC has maximum 10 vehicles in a previous year. If I am having 11 vehicles, then for me 44 AE is not applicable. I need to get my books of accounts audited if that any of the criteria is being followed, that more than 10 crore or 1 crore as the case may be. Partners remuneration analysis shall be deductible. In this case, it can be allowed. Okay, then heavy goods truck income means it is having the weight of 12 tons. There's more than 12,000 kg. Okay, then it will be treated as heavy goods vehicle. If I am having the goods vehicle having a weight of more than 12,000 kg, then the income shall be treated as 1000 per ton into tons into number of months. Okay, then no need to maintain any books of accounts. If I declare lesser than that prescribed formulas amount a profit, then I need to get my books of accounts audited. Then deduction should not be allowed. The W is to be computed as usual for making the depreciation, notional depreciation for my future purpose. Section 44B, 40B, okay. Payment of interest, salary, commission, remuneration. Interest remuneration paid by firm or LLP is allowed as a deductions if following conditions are satisfied. in the books of accounts of firm, partnership firm, the remuneration or interest or any salary can be allowed if the following conditions are satisfied. The remuneration should be payable to working partner only. If any other for non-working partner, the one non-working partner, if any of the remuneration is being paid, then that is disallowed. The remuneration interest should be authorized in partnership. And partnership day, some clause with regard to that remuneration and interest should be mentioned. Then interest on capital should be limited to 12% of per annum. Okay, it should be restricted to 12%. Remuneration should be allowed on book profit. We are not on the PGBP profit. We have to compute the remuneration on book profit. What do you mean by book profit? We'll see in the next slide. We'll discuss it now only. Net profit under section PGBP after computing area, disallowance, everything, minus depreciation allowable under section 32, then it shall be added back by the remuneration if it is being charged, if it is being debited to profit and loss account. If any partnership firm is paid any remuneration without calculating this the formula, by simply provided that remuneration amount in the books of accounts, we have to add back that to arrive at book profit, because the remuneration should be payable on the basis of book profit. Okay, and hence we have to arrive at the book profit. Now, out of the first 3 lakh book profit, the remuneration shall be 1,50,000 or 90% of the book profit, whichever is higher. For balance book profit, the remuneration shall be 60% of the book profit. This is very little confusing. I am taking one example. If my book profit as per this formula is 5 lakh, then maximum remuneration that partnership firm can pay is up to 3 lakh. Then remaining 2 lakh, we have to categorize. Up to 3 lakh, 90% of 3 lakh, 90% of book profit, that is 90% of 3 lakh in this case, or 1,50,000, whichever is higher. 90% of 3 lakh means 2,70,000, or 1,50,000, whichever is higher means 2,70,000, plus remaining is there, no, 2 lakh. After 5 lakh, 3 lakh is exhausted. Now 2 lakh. For 2 lakh, 60,000, 60%. That is 60% of 2 lakh will come around 1 lakh 20,000. If you add both, this is 3,90,000 is a maximum remuneration that partnership firm can pay to the partners. I hope you are understanding with this example clearly. Then the 40BA, interest, salary, commission paid by AOP or BOI. 44B talks about the partnership firm. This is talking about AOP or BOI. While computing PGBP is also disallowed, same as 40B. Okay. Some of the explanation to 40B or 40BA. If any individual is a partner in a firm as an individual capacity, if I am a partner as an individual capacity and receiving an interest on representative capacity, then 40B is not applicable on such interest. That means if you are paying more than 12% interest also, that is okay. It's the same category. If I am an individual, if I am a partner as a representative capacity, but I am receiving the interest on individual capacity, don't go through deep in this concept. If any question says the representative capacity, individual capacity, or in MCQ says then it is gone, and then 40B is not applicable. That means, for example, if I am paying an interest on 15%, if both these conditions are satisfied, then 15% that can also be allowed in case. But this above explanatory is only applicable for the interest portion also, information only, not for remuneration. For remuneration, we have to see the book profit. 60-30, 60-90, we have to take the formula. Okay, this is the explanation is applicable for only for that interest portion only. Okay, next special rule for 43B. 43B says that if expenses is being paid on or before the 31st of the on or before the due date of filing income tax return, that is allowed. Okay, or in a subsequent year when it is being paid, then in that year it will be allowed. For MSME, they have brought, this is a new concept in this chapter, this is a clause H of 43B. This is says for only for MSME, that is micro, small, medium enterprises. Section 15 of MSME Development Act 2006 explains that the payment for goods and services to MSME by the buyer. For example, I am the buyer, I am having a credit balance towards the MSME organizations, then that should be made as per the written agreement. That should be made within the due date specified within the written agreement. Maximum limit that MSME organizations can provide to me is 45 days credit period. Okay, if there is no written agreement, then payment should be made. That payment should be made by me to that MSME organizations on or before the 15 days. In such case, the deductions would be allowed in a previous year in which it is actually being paid. Okay, not so important, but I am doubt that question might ask with regard to this. An example, we will take one example. Mr. A has purchased goods of 10,000 from A and Co. That's a MSME organization on 1st March 2024 as per written agreement. Between them, the payment needs to be paid by 5th April 2024, that is in the PFS year 24-25. Mr. A follows the mercantile method of accounting. In first case, Mr. A paid the sum on 2nd April 2024, that is within the agreement period. Since the payment is before the 5th of 2024, the deductions would be allowed in 23-24 only. If Mr. paid the sum on 20th April 2024, that is after the written agreement, after the 5th of 2024, then the deduction would be disallowed in 23-24, will be allowed in 24-25. Okay, then there is some definition of micro MSME might be asked for your MCQ portion. Don't know, but keep an eye over this also. Manufacturing MSME rendering services. MSME rendering services means a micro enterprise. If investment in plant and machinery is up to 1 crore and turnover should be up to 5 crore, that's also micro enterprise. Small enterprise means investment in plant and machinery is up to 10 crore and turnover is up to 50 crore. You have to include 1 zero beside that previous micro enterprise ka limit. Very easy to memorize. If micro enterprise 1 crore investment, 5 crore turnover should be limited. If I am having a small enterprise investment 10 crore, you have to add 1 zero. And turnover 50 crore, you have to add 1 zero. That's it. This is the completion of PGBP chapter. Very congratulations. If you have any doubt, please ask me in the comment section. You can also approach me in the LinkedIn, Instagram, or you can also mail me in the provided mail ID provided in the description box. I hope you have enjoyed this entire chapter PGBP, and if you have any doubt, please be free to ask me at whatever time, and don't forget to subscribe to my YouTube channel. This is only a written that you can give to me in terms of this free education, and let's see in the next chapter, that is capital gain. Next heads of income, that is capital gain, shortly. Till then, please revise over and over again, again and again, that because you might there might be a chance of forgetting the things, these silly things, because this is very important chapter. I am again highlighting this chapter as it is considered as A category chapter. Don't forget to skip this. Don't forget to revise for several times, and have a nice day. It was great meet to you, and this is signing off. Abhi CA Classes, Abhi CA Abhijith Acharya. Bye bye.